Welcome to the Deep Dive by Outlier, where we uncover the market's hidden trends and give you the edge you need. Head on over to ovtlyr.com right now to save time, make money, and start winning with less risk today. Now let's jump right in.
Okay, so imagine this. You're about to lock in a mortgage rate, and all of a sudden you hear that the Bank of England might cut interest rates today. What would you do? Well, that's exactly what we're diving into today, the Bank of England's rate decision. We've got a whole stack of up-to-the-minute articles from CNBC to help us break it down.
Yeah, it's like a big economic chess match going on. We've got the Bank of England, of course. The UK's finance minister, Rachel Reeves, is in the mix. And even the U.S. Federal Reserve is making moves.
Right. And the crazy thing is the BOE was expected to cut rates. But then, all of a sudden, this budget comes out and it's loaded with tax hikes. And now everybody's kind of wait, what's going to happen?
Yeah, everyone's trying to figure out what they're going to do.
So let's try to unpack this thing. The original prediction was for a 0.25% rate cut, which would bring us down to 4.75%. And this would be the second cut this year, right?
Yeah, that's right. And I think there's a pretty clear reason why this is happening. Inflation has really taken a nosedive. Back in September, it was only 1.7%, which is actually below the BOE's target of 2%. And on top of that, wage growth has also slowed down.
Okay.
These two things together kind of point to the idea that the economy is cooling off a little bit. And that's where rate cuts come in. They can help stimulate things and get things moving again.
That makes sense. And CNBC is reporting that the money markets are super confident about this cut. 97% chance, they say. But then Finance Minister Reeves just drops this budget bomb, 40 billion pounds in tax hikes. Plus all these changes to the debt rules.
Yeah, it's a big move for sure. The goal there is to free up more money for public spending and investment, which sounds good in theory, but it could also end up making inflation worse down the road.
Oh, so?
Yeah, so the BOE might actually have to reconsider those future rate cuts if inflation starts to creep back up.
And it's not just a theoretical thing either. It's already happening. Some lenders are already raising their mortgage rates because of this budget, even though a rate cut is right around the corner.
It's wild, isn't it? And you know what makes it even weirder? You see how different lenders are reacting? CNBC is reporting that Virgin Money is actually raising their rates.
Really?
But then on the other hand, you've got Santander who are actually lowering theirs.
So what's the deal with that?
Well, it all comes down to how each lender assesses the risk and what kind of strategy they're using. Some might be playing it safe, while others are trying to be more aggressive.
So for the average person who's just trying to figure out if they should lock in a rate now or wait, it's got to feel like they're stuck in a maze.
Absolutely.
And actually, CNBC quotes one expert who says, it's a confusing time for mortgage borrowers when the expectation is for a base rate cut, but fixed rates look set to rise.
Yeah, it's definitely a head scratcher.
And then to make things even more complicated, you've got the U.S. Federal Reserve, who are also expected to cut rates today. So what does all this mean for the global economy?
But to be honest, we're in uncharted territory here. The BOE is trying to walk this tightrope between stimulating growth and keeping inflation in check.
But there's got to be a catch.
Well, there's always a flip side to these things. When inflation is too low, or even if we have what's called deflation, that can actually be a sign that the economy isn't doing so well.
Yeah.
Central banks like the BOE, they try to aim for the sweet spot of around 2% inflation, because that usually means the economy is growing at a healthy pace.
So it's all about finding that balance.
Exactly.
And this is where things get even more interesting, because the CNBC articles also suggest that the UK government's new budget, with all those tax increases, could actually end up pushing inflation higher down the line.
Yeah, that's a real possibility. When the government spends more money, it can sometimes lead to higher inflation, especially if it's not managed carefully. So they're trying to invest and stimulate the economy. But those actions could backfire and lead to higher prices later on.
It's a tough balancing act.
It really is.
And the Bank of England is definitely keeping a close eye on it all. So as we wrap up this deep dive, what's the one big takeaway you want our listeners to remember?
I think the most important thing to remember is that the economy is constantly changing. It's influenced by so many different things, both here in the UK and around the world.
So basically, we should expect more twists and turns, more surprises, and more decisions that will have an impact on our financial lives.
Exactly. The best thing you can do is stay informed, understand the trends, and make decisions that are right for your own personal situation.
And that's really what we've tried to do today. Give you the knowledge and insights you need to make sense of it all.
We want to empower you to make informed decisions.
So stay curious, stay informed, and as always, thanks for joining us on the Deep Dives.
Hey, thanks so much for deep diving with us today. Head on over to outlier.com. That's ovtlyr.com to save time, make money, and start winning with less risk today. And we'll see you next time.